Now that everyone is fat and happy from the pleasantly gluttonous Thanksgiving meal, it's time to turn our appetite to those scrumptious deals and savings on things we probably don't need, but absolutely want. Unfortunately, the entire planet is still dealing with supply chain issues, and here at home in the US, inflation is causing a dilemma on if we should buy non-essential stuff this holiday season. And if you add travel on top of that, gas prices set an unhappy choice between that day trip to see family or more presents to pass out. But whose fault is all this mess? Nope, not just yet. But we'll get back to him. Not him either, but getting closer. To be honest, there's no one to blame, but what? And here it is. It's a series of unfortunate events that cause the Swiss cheese effect. Like each slice of Swiss cheese, each layer of the supply chain is mostly sound but with minor holes and flaws. Normally, when these layers are stacked, no problem, the holes are covered. But when these holes line up, it exacerbates the problems. COVID-19 was the first major hole to line up. It shut down the world early in 2020, and we are still feeling those effects today. Factories across the globe shut down at various times during the peak of their local infection. Production ground to a halt. And quickly, what little stock of goods being held on warehouse shelves went out with no replacement. You see, in order for companies to keep cost risk down with tons of products on standby, they depend on a continuous produce, sell, replace model. This keeps workers working, consumers happy, and money flowing. But when an enormous unforeseen delay rears its ugly head, recovery is slow. Not to mention, with the world closing down, online shopping skyrocketed. Even though services suffered, the need for goods did not. And we saw that with the toilet paper shortage right out of the gate. The labor shortages that resulted from the shutdowns was another hole to line up. With stock gone, it would be a mad rush to try and replenish. But herein lies that problem. When one major production hub reopens from its COVID restrictions, there are still numerous other areas around the world still suffering. And it only takes one specialized screw made somewhere with closures to keep full production going in areas that are up and operating. And these country by country restrictions also lead to major delays in oceanic shipping. And air freight almost completely died with its reliance on commercial flights being grounded. And here in the US, the import-export market balance took a toll. Imports went up by 20%, whereas exports dropped by 20%. That means all those shipping containers that get reused and are relied upon to be sent back and forth caused a container shortage in Asia. Normally, once barges are offloaded and reloaded from US ports, 60% of those containers are empty. But during COVID, that shot up to 80%, and the underways became less frequent, meaning those goods that were available for shipping had no ride. Throw in a traffic jam in the Suez, the busiest one-way street in the world, and it's even more delays. Then there's the other factor of when demand shrivels up. Only one word best describes it: bohica. The automobile and by proxy the oil industry also took a major blow last year. With nobody traveling and businesses finding the cost effectiveness of having more people work from home, oil and auto companies cut production. Now that we are returning to pre-COVID norms, the demand for gas has skyrocketed, and the oil cartel OPEC won't increase their barrel production, keeping supply scarce. And the US production is trying to keep pace, but as we saw with the Texas winter storms and hurricanes in the Gulf of Mexico, even small delays cause big price bumps. There are two options that get thrown around: stop the export of US oil and redirect it home, or tap into the 600 million barrel strategic petroleum reserve. Neither of those would have the desired outcome of lowering prices. The former option could backfire because it would affect the global benchmark for price, known as Brent crude, and cause a knee-jerk reaction for price increase of other oil producers that we do import. Not to mention the blatant government intrusion on private business practices. The other option, tapping into the reserve, might give a slight short-term solution, maybe, but this would only be a facade. Even in that scenario, only limited release is possible, and the underlying problem, demand, would not be solved. In fact, with the holidays upcoming, tapping into the reserve could cause a false sense of relief, increasing demand even more and resulting in even higher prices rolling into next year. As much as I would like to blame Biden or Trump on this mess, neither really has any direct influence over the current situation. But the inflation that is coupled with this already helpless scenario absolutely is. Sure, the supply chain fiasco, increase in demand, and bottleneck issues have some level of culpability in inflation, but the astronomical deficit spending under both administrations, even more so now with Biden's support of the Federal Reserve and Treasury printing trillions of new dollars, an aggressive financial response to COVID, this has fast-tracked inflation and weakened the US dollar. The US economy is powered by the consumer. And with generous COVID aid, robust unemployment support, increased government spending, the money is there, causing an unrealistic demand with no supply or support. This has been the perfect storm. From every action, no matter the righteous intent, has led to the lining up of all those Swiss cheese holes. But is there anything that can be done? Maybe, but it's not easy. And it's sure to piss off each side of the aisle. For one, stop the spending. The government needs to get smacked every time they try to spend money they don't have. So just stop. Relax tariffs, even with China. This would dramatically reduce shipping costs, especially since we now know the issues. That cost savings alone would ease consumer pricing, and it would boost international trade and start encouraging US exports. But with that, we have to address the worker shortage here, and this is tricky. It's not all because of unemployment benefits, but those do need to be scaled back. Another hole in the Swiss cheese that goes unseen is the enormous amount of boomers retiring. As one of the largest working generations, the pandemic has been a catalyst for numerous retirements and leaving behind holes normally in higher positions to be filled. Those are being filled, but it's now entry-level positions that can't be. We can relax immigration and right-to-work visas. Immigration itself is not bad and is vital to a healthy economy, especially during a time of a dwindling workforce like now. So either boomers keep working or we allow more people who want to work to work. And finally, we need to take some action, maybe being a little more fiscally prudent. Or we can also redirect our funds by flushing services with money instead of goods and products, and be understanding and patient because they are short-staffed. And when we do buy products, aim for domestic. Look, as much as I would love to lay blame on one person, we can't be unrealistic. Yes, Biden is not helping inflation, but the show we're in started early last year when the first domino fell. There's no easy out, but returning back to normal is going to require a little perseverance. We need to stop being immature about things and work together. Because if we continue to expect one person be accountable for our desired outcome, we continue to undercut our own power and responsibility of we the people. We need to look at the silver lining. The US is faring better than most parts of the world, and is beginning to return back to normal faster. Supplies will eventually be replenished. The consensus of economists support this being transitory inflation, with stabilization by this time next year. We need to heed these lessons learned from the fragility of the global supply chain and increase local and domestic production, and strengthen and promote open trade between us, Mexico, and Canada. The U.S. prides itself on its resiliency and has proven that point decade after decade throughout history. This too shall pass.